What's up everybody, Nate here, and so far 2023 has not gotten off to the best start. Americans so far have lost around $6,000 in their annual wages due to inflation. Not only that, but markets have been hit over the last couple of months, with the stock market actually dropping by over 20% throughout 2022. The housing market has seen some of its fastest price drops over the last few weeks. Meanwhile, mortgage demand has dropped for the last 12 months. And the cryptocurrency market has lost over $2 trillion to date, and this has led many to believe that we are currently in a global recession. But unfortunately, some believe that things are about to get a whole lot worse. Robert Kiyosaki, the famous investor and founder, is saying that our entire world economy right now has formed one of the largest super bubbles in world history. And while we have definitely seen bubbles in our economy and the world economy before, according to him, this is nothing like we have ever seen. Not only that, but Robert Kiyosaki believes that the super bubble is going to pop as soon as this year. And when it does, it might just change our entire economy forever. Now let's kind of break down what Robert Kiyosaki means here when he says a super bubble. Now, a bubble in general basically means that things are being artificially pushed up in the finance world. So over the last couple of years, we have definitely seen a lot of assets and a lot of things in our economy go up in value, but they went up in value kind of beyond what fundamentals were. So going through one by one in our economy, the stock market, for instance, gained back all of its losses from 2020 in 2021. It had basically boomed and set new record highs at the end of that year. Same with the housing market. It went and took a huge plunge in 2020, but then all of a sudden exploded pretty much immediately after the largest parts of the pandemic, with home prices hitting new record highs and interest rates hitting record lows. Cryptocurrency exploded too, gaining trillions of dollars in value essentially overnight, and Bitcoin especially gained a ton of value too, growing to $66,000 plus at the end of 2021. Gold went up, and Americans' finances also went up too. We've seen an unprecedented amount of saving, and we also saw incomes hit an unprecedented high as well. So basically what you need to know about a bubble is everything in your economy or one thing in a particular sector goes up really quickly. Again, beyond what it actually should be doing. Now, the reason why all of this kind of went up was pushed by the Federal Reserve and, of course, a lot of our decisions from the federal government. During the pandemic, they wanted to push everything up by printing a whole lot of money for stimulus and for our unemployment programs and just for Wall Street in general with its quantitative easing program. That meant that we had trillions flooding into the economy, and I mean trillions, because we had roughly $3 trillion in circulation at the start of 2020, and today we have over 20 trillion. So there is a whole lot of money out there. A lot of money for people to spend, a lot of money for people to save, a lot of money for people to invest. Not only that, but the Fed also lowered its benchmark interest rates down to 0%. That meant a whole lot more investing. That meant a whole lot more home buying. That meant a whole lot more auto buying and people just spending on credit cards in general. So spending was increased. Everything sort of went up, and that's why you also had this big inflation bubble, because our economy was not really on the same page with the amount of money that was in, well, our economy. Everything kind of needs to be in a balance, and Robert Kiyosaki believes that everything is so far out of balance that now we have a super bubble. Super bubble term kind of comes from this idea that everything is kind of going up. So like I mentioned before, we have had bubbles in American history before. We had the tech stock bubble of 2001 essentially pop that same year. This was when a bunch of tech companies and a bunch of tech stocks gained a whole lot of investor interest and gained billions of dollars in value essentially overnight. All they needed to do was slap www onto their company name, and all of a sudden now they were a billion-dollar company. But the fundamentals really didn't make a lot of sense, right? Just because you have a website and just because you are a tech company doesn't mean that you're going to become a billion-dollar company. It doesn't mean that you actually have a lot of value. It just means you started a website. Now, that was at a time when nobody really had a website, right? So it seemed like this really big accomplishment, and people were betting on the future of the internet. Now, while the internet obviously exploded and was the real bet, a lot of those companies ended up failing. So that created a lot of value, and then that value was immediately erased. We had the housing market bubble essentially formed between 2000 and 2006. In 2007, though, it ended up popping because millions of Americans ended up buying houses that they could not afford because they didn't have the assets and they didn't have have the income to support their mortgage payments. Not only that, millions of people got a mortgage that was an adjustable rate mortgage, meaning they got in at a really, really low introductory rate, but then when the rates went back up, they were essentially screwed. Everything sort of collapsed from there, and housing values lost 90 to 100% of their value in just a few months. But again, that was just the housing market. But the issue with the super bubble and bubbles in general is depending on what they're linked to and connected to in our broader economy, well, then that can cause a lot of other issues. For instance, the 2001 tech stock market bubble didn't really create a lot of massive problems for our economy. Sure, we did see unemployment spike and we did see a few layoffs here and there, and the stock market did go down, but for the most part, we didn't really see an economic recession or big, massive sweeping problems in our day-to-day lives. That's because it was isolated. It was really only in the stock market, and at the time and those assets, they weren't really linked to other things in our economy. However, the housing market bubble, when that eventually popped, well, that caused a whole lot of issues. The housing market was connected to a whole lot of things. It was connected to insurance companies, it was connected to pensions, it was connected to mortgage-backed securities, and simply everybody had their money in the housing market. When that bubble popped, when foreclosures started to go up, all of your investment banks and all of your Americans that couldn't afford their house, well, now they were all losing a ton of money all at once, and we had all of these economic problems bleed into our broader economy. A recession came from that because the housing market bubble popped. We didn't have a recession before that. It was caused by the housing bubble. So when Robert Kiyosaki says a super bubble, he's kind of referring to everything going up. And when you have everything going up, like we have seen over the last couple of years, that means that there is a lot more things that are connected here than we have seen in American history. When you have just one market going down in the United States or one particular asset essentially crashing, well, of course that sucks. Nobody likes to see a company go out of business. Nobody likes to see people lose money in their assets or lose money in their retirement fund. But that is just one sector of the economy that is going down. It's when you have a market that is fueled by greed that things really start to get out of control. And that is the fear that Robert Kiyosaki has. Everything over the last couple of years has been born out of greed. And when this super bubble pops, it's going to be disastrous. Basically, with the stock market going up so quickly and setting record highs over a year ago, that means that a lot of businesses and startups and IPOs have launched on the New York Stock Exchange. So you have a whole lot of value going into that market all at once, but now that value is going to be eliminated. And yeah, we're talking about paper assets here, and we're talking about money that isn't really for sure secured, but when these businesses lose a lot of value, they tend to try to cut costs in order to continue to be a valuable company, and that usually means cutting people. Now you have a lot of startups, and you have a lot of Americans losing their jobs to companies losing value on the stock market and private companies also losing value, not to mention all of the startups that are not going to be able to receive any funding and are not going to be able to launch as an IPO or grow as quickly to hire more people because of this economic downturn. That leads to unemployment, and that leads to a lot more layoffs, and that is exactly what we could see into 2023. Now, what exactly is causing that? Well, it's the Federal Reserve raising its interest rates. It's now flipped the script on what it's been doing over the last couple of years, and in 2022, it raised interest rates aggressively and quickly multiple times. So that means that interest rates are very high, and with people already struggling financially, now they're having a hard time buying a home or buying a car, and they're looking to spend on credit cards or buy now, pay later services in order to get by and buy the things that they need or just want. Not to mention, they could end up losing their jobs even faster into 2023, which is going to mean even less spending for a lot of startups and businesses that are public. So they're going to have a lot less money. And again, that just leads to a lot less jobs. And furthermore, with the housing market going down, that means home values are going to go down too, which means property taxes are going to decrease as well, which means not as much money for the state or federal government. So they're going to have to figure out ways to fund all of these big projects they've started over the last couple of years without as much taxes. And the Federal Reserve can't exactly stop raising interest rates because it has to continue raising them until it sees that inflation is basically back to its target rate of 2%. Right now, we're just over 7%, so they're not even close to that yet, and they have a lot of work to do. And Robert Kiyosaki believes that there could be another big bailout around the corner, as many people are going to lose their jobs, many businesses in the stock market are going to lose too much value, so the government may have to end up stepping in and providing some liquidity in order to kind of keep our economy from going under. Now, a couple things about Robert Kiyosaki and this whole idea of a super bubble popping in 2023. For one, Robert Kiyosaki has been saying things similar in our economy for the last few years now. He has been talking about a global economic collapse, not really pinpointing a specific time, always saying that it's coming, it's coming, it's coming, it's around the corner. Right now, Robert Kiyosaki works in media, and he goes on podcasts and writes books, and as a personality, he has to say things that are going to grab your attention, and he does that very well, and this is a marketing tactic that I think a lot of people can take away. So things are always really extreme when it comes to the things Robert Kiyosaki says. As to this super bubble idea, well, we could be in a super bubble. I mean, I definitely agree with the idea that everything has gone up really, really crazy high and beyond fundamentals over the last couple of years. Nothing really went up naturally, and that's why we're having a lot of the problems, because all of these things just simply don't go up this quickly on their own. Now that things are getting pulled away just as quickly, we could end up seeing a collapse. But that's not necessarily a done deal. Our entire economy goes through cycles, so we have booms and busts all the time. Things are going to go up very quickly, and things are going to drop just as fast. This is what happens with our economy over time. We do have bubbles in our economy, and I think we do have some bubbles in our economy right now. And to say that something is in a bubble also implies that that bubble has to pop eventually. It can't just grow and grow and grow forever, or else it's not really a bubble. Everybody's really happy and really greedy when we have the booms in our economy, but then nobody is really prepared for the bust because everybody just assumed during the boom that this would last forever. Not only that, but people are afraid when they hear a bust, or they're afraid when they hear a recession. And a recession is really scary. It comes with a lot of unemployment. It comes with a lot less spending. Everything seemingly changes overnight in our economy, and that is really scary. But a recession doesn't have to be this really scary thing if you are prepared for it ahead of time. As we have those busts in our economy, everything is going to reset, and you're going to have a lot of businesses file for bankruptcy. You're going to have a lot of people laid off, and you're going to have a lot of assets on the stock market and in other markets go on sale. They're going to go down in value, and that means that you can buy up those assets at a discount. Eventually, the stock market goes back up. We have seen this all throughout history, and we have had massive crashes time and time again. This is the boom and bust cycle that I'm referring to. If you can prepare your finances ahead of time, though, you can capitalize on those opportunities, and you won't be as afraid of a recession because you will be in the best position possible. And if you can capitalize on this opportunity, then you won't have to worry about the next recession or the next one, because trust me, we are going to see another potential recession in our economy. That's just how it goes. The fact of the matter is we don't know. Robert Kiyosaki could be right, he could be wrong, or we could be in a recession right now, or we could see an economic boom this year. Nobody really knows. That's why you need to be prepared for both economic scenarios with your financing. And the sooner you do that, the sooner you can stop worrying. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.